Global coronavirus cases crossed the 10 million mark over the weekend, with around 1 million new cases per week, according to the WHO, and deaths now at 500,000. In reality, these figures will be much higher due to the reporting discrepancies from nation to nation. The US accounts for around a quarter of both totals, the country regularly hitting record one-day case increases en route to 2.5 million known infections and over 125,000 deaths. States like Texas and Florida, the latter which from the beginning has had some of the laxest lockdown measures imaginable, have been especially badly hit, causing both to reverse their recently announced reopening plans. Yet investors can't quite seem to make up their mind about an impending COVID-19 second wave in the US, or more accurately, the acceleration of the initial uncontrolled outbreak. Sometimes it is all they can think about, causing sharp losses across the board. At other moments, they manage to swallow that bitter and then get on with focusing on other potentially more positive matters. The third option is that they then sit in a sort of uneasy calm, unable to really decide which way to go. Regardless of how the markets feel about it, the reality is the situation in the US, and indeed much of the globe, is increasingly grim, with the country recently seeing a record one-day increase of 40,000 cases in a single day, which is mad when you consider that we're now over 3 months into the coronavirus pandemic in the West. It's forced states and businesses alike to abandon certain reopening plans and will likely only exacerbate the unemployment crisis that has been brewing for the last few months. Talking of jobs, it's a non-farm Thursday, not Friday this week, due to the US having Friday off ahead of Independence Day on Saturday, meaning the report will come alongside the usual jobless claims reading, which is persistently lingering around the 1.5 million mark, regardless of analyst estimates each week. May's updates saw the latest astonishing figure of the pandemic era, as more than 2.5 million jobs were created across the month. That's so much better than the 7.75 million jobs lost forecast, and April's stomach-churning 20.7 million wipeout. It was almost unbelievable. It also means that investors won't just be interested in how June stacks up, but whether or not May's non-farm number has undergone a significant revision. Analysts are expecting another strong month, however, with forecasts of 3 million further jobs created. Similarly, the unemployment rate is one to watch, with May's reading of 13.3%, both vastly undershooting the 19.4% expected and the 14.7% seen the month prior. This time, analysts' expectations sit at 12.5%. In the run-up to that jobs-heavy Thursday session, there's the pending home sales number on Monday, while on Tuesday the Chicago PMI and consumer confidence figures come alongside the latest testimony from Fed Chair Jerome Powell. Wednesday, meanwhile, sees the ADP non-farm employment change reading, the market and ISM manufacturing PMIs, and, in the evening, the most recent Fed meeting minutes, which could prove to be illustrative about what the central bank has planned. This isn't necessarily surprising. Markets' behaviour recently isn't necessarily surprising. Investors have been inconsistent about how they've been behaving regarding a potential second wave. And it's going to be interesting to see this week what direction they take, if they do take any one direction. Last week it was a bit of a mess. Like, you had pretty significant falls, pretty significant gains on some solid PMI data, especially in Europe. The US figures weren't anywhere nearly as strong. But by the end of the week, the investors it seemed to be that the US markets were firmly focused on the negative and were sort of forcing the European markets to pay attention as well. It'll be interesting to see, with the amount going on and it being a truncated week in the US, and the fact you're seeing a shift from June to July, where exactly investors' attentions lie and how much they can sort of keep putting off purely being focused on the now real rapid increase in coronavirus cases, which, as mentioned, is especially alarming given at what point we're in the pandemic. Like, months and months in, this ideally shouldn't be happening now. And in the US, it arguably wouldn't have been happening if better lockdown measures were put in place earlier and then kept in place for longer.